Hey everybody, Rob Maurer here, and today we are talking about updated China-insured vehicle numbers, some pretty exciting numbers coming out there. We also have the Consumer Price Index, some news on supercharging, a couple of updates on BYD, and more. Really quick update before we get into the episode. Some of you may remember that back in October, I announced that I was looking to organize efforts to explore opportunities around private companies. I briefly had a forum open for those that were interested. As some of you know, that has been going really well, but I do owe an update to many of you. So I am planning on sending out an update on that tomorrow, and I am going to be briefly, again, reopening that form. If you are interested and didn't catch that the first time around, the link for that will be in the description. If you did already fill that out last time, no need to do that again. All right, moving into the episode. Pretty green day in the markets overall today. The Nasdaq up 2.1%. Tesla, following its beta, may be outperforming a bit, up 5% to close at $183.26. That stronger performance in the market today coming despite the Consumer Price Index report, or CPI report this morning, which, depending on how you look at it, did come in a little bit hotter than expectations. The headline number, so the entire index, did come in line with expectations. That was up 6% year over year. So that is looking like a nice continued downtrend, but we are starting to compare against higher increases from last year. The month over month probably a little bit more interesting, as that gives us a better sense of how numbers would annualize on a go-forward basis. So core CPI month over month, excluding food and energy, that came in at 0.5%, higher than expectations, higher than the last 4 months. And if that sort of month over month change persists at about 0.5%, that ends up yielding 6% inflation on a year over year basis. So as we have talked about previously, what the Fed would really like to see on these month over month comparisons would be something in that 0.1, 0.2% range. So it doesn't look like a great report. One of the fair criticisms of these indices in general, though, has been how they account for shelter. Many people believe that that has been a significantly lagging indicator in these reports. We've talked about how Fed Chair Powell seemed to acknowledge that at the last FOMC meeting, saying that they were seeing signs of shelter starting to come down. And then goods inflation has been in a decent spot for a while, so Powell specifically said that one of the things that they're watching for in these reports is core services excluding shelter, since they were not really seeing signs of disinflation in that major category quite yet. Unfortunately, in this report, if we look at core services excluding housing, that also increased 0.5% month over month. Just like core CPI, this was also higher than the last 4 months. So not a great sign. We know that's an area that the Fed is watching very closely. Overall, probably not really the best report. Maybe the best thing being that it wasn't even worse than expectations. Slightly worse, but the January report, remember, came in much worse than expectations. If we take a look at how today's news has affected interest rate expectations going forward, which have been volatile for the last week or so to say the least, expectations for a 25 basis point increase rather than a pause at the next meeting have increased since yesterday. That's now at about 80%. We do have the Producer Price Index report tomorrow morning, but barring any other major banking news before the next meeting, that's also my expectation, a 25 basis point increase. I think the Fed will feel kind of pigeonholed into that because they're not seeing the things that they want to see in reports like the CPI yet. And without that, based on their prior communication, I think a pause would come off as a bit of a panic, which is the last thing that they want to do right now. So 25 basis point increase seems like the most likely path to me. All right, let's move on to China insured vehicle numbers. This is starting to get very interesting as we now already somehow are moving towards the end of the quarter. These next couple of weeks of data will really give us our best indication of how demand in China has reacted to Tesla's price cuts at the beginning of the year. To set the context for the week that we're talking about here, which is March 6th through March 12th, total insured vehicle registrations across China, so the total industry, was down about 11% from the week prior and down 9% year over year. So the tough market in China continues, but the uptrend that we have seen from Tesla over the last few weeks has continued as well. Over the last week, there were just over 17,000 vehicles from Tesla insured in China. That is up significantly from the week prior at just over 13,000. And as we can see, this is actually the highest number for Tesla over the last couple of quarters. This moves the quarter over quarter comparison through the first 10 weeks of the quarter, like we had talked about last week, to down just 10% for Tesla quarter to date. That's an improvement from the down 16% it was running at when we talked about it last week. I would expect that improvement to continue over the next few weeks, as at this point in the fourth quarter, we started to see week over week declines, as you can see on the chart. So if over the next few weeks Tesla can maintain numbers anywhere close to this, that puts them very much in contention for another record quarter in China. They'd need to average about 12,000 per week over the next 2.5 weeks for that to be the case. So we got to see if this continues, but for now it looks like a great number. Bringing in the other context from BYD, they actually declined week over week to about 37,000 from about 39,000 the week prior. So same comparison like we talked about with Tesla, BYD now tracking to down 20% quarter over quarter. And unlike Tesla, where those final weeks of Q4 tapered off, BYD's numbers increased all the way to the last week of the year, so their comps are getting harder as we go through the quarter, while their numbers for this quarter are already starting to downtrend, Tesla in the exact opposite situation, uptrending and against easier comps. If you're not familiar, comps just means comparable period, so in this case talking about these weeks in this quarter versus the same weeks sequentially in the last quarter. All right, moving on from insured vehicles, we've got another update today on BYD. We talked about the report out of Korea yesterday that Tesla had stopped using BYD battery cells. The report implied that that was because of fire risks. We talked about why we should be skeptical of that. Turns out we should be skeptical of the entire report, BYD saying to Reuters that the report is, quote, not in line with the actual situation, end quote. Elon also commenting on Twitter saying, quote, that media report is false, relations between Tesla and BYD are positive, end quote. So whether the full report is wrong or just parts of it, we don't know for sure. BYD's denial sounded a little bit less firm, just saying it's not in line with the actual situation. Makes it sound like there is some sort of a situation. So I guess we're kind of just back in the shroud of not a lot of information on this relationship and this partnership, but it sounds like we may not have heard the last of these companies working together in some way. All right, next up, we've got some new insight on Tesla's version 4 superchargers. Of course, during Investor Day, Tesla mentioned that they had been installing V4 in Europe. There are a few people in the Netherlands that have tracked down one such location and have been following the installation process. Fritz Vanens on Twitter sharing a lot of these photos, and this location looks like it is now very close to being complete. So no surprise based on the diagrams that we had seen and previously talked about, but the full pedestal here looks like an upsized urban supercharger. But very exciting to see these starting to be installed. It sounds like this location is going to open up this month. We'll see if there's any difference right away in the charging capabilities or if Tesla's going to wait a little bit on some of those things. But if nothing else, clearly quite a different architecture. We can see the internals, and thanks to Tesla Chan, we can see that compared to version 3. Looks like version 4 has a little bit more going on from a hardware perspective, so it'll be interesting to see what Tesla's got in store for this update. Next, we've got some quick news from The Boring Company, always a little bit relevant to Tesla. They have announced on Twitter today that they have surpassed 1 million passengers served, which of course means 1 million people that have ridden in, that have been exposed to Tesla vehicles via The Boring Company, many of whom may not have had that experience otherwise. So some nice exposure there for Tesla's brand. And speaking of Tesla's brand, we have an actual Tesla brand that has been added as Tesla's newest item in the Tesla shop. So this is a Tesla branding iron. It is available for $70 US. I don't know the dimensions of the brand, but Tesla says that it's meant to be used on things like burger patties, so probably something in that size range. If you're wondering why Tesla is doing this, well, Tesla says this is inspired by the Cyber Rodeo, and they urge potential customers to heat and stamp with caution. All right, last item for today, as we had expected from comments from Microsoft Germany last week that we had talked about, OpenAI today did release GPT-4. The model will be available for ChatGPT Plus members for the time being, so it'll be interesting to get a feel for the amount of progress, but OpenAI has shared a lot of information on testing, on different performance benchmarks, etc. I think it's nicely recapped. It would be cool to see Tesla do something like that with FSD updates. We get a lot of similar information from the release notes, but I think that's a difficult format for people to kind of understand without some assistance, and that's what something like this kind of helps with. So kind of cool to see. Not sure it actually makes sense for Tesla in reality because a lot of work goes into that, but I think it would help people get excited about the progress and be able to understand the progress a little bit better and being able to explain that to others. So some benefits, but ultimately not sure it'd be worth the cost, though would be interesting to see. All right, that is where we'll wrap it up for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Wednesday, March 15th episode of Tesla Daily. Thank you.